Good afternoon, everyone. Thank you all for joining us today. We are excited to have the opportunity to speak with you about the current state of the stock market and what it means for your portfolios. I am Mike Yan, Wealth Portfolio Manager, and I'm joined by Adrian Helfert, CIO of Wealth, and Dan Nichols, Client Portfolio Manager from Jennison Growth. Jennison is our large cap growth manager, and Dan is here to provide insight on the growth sectors of the equity market. I will turn it over to Adrian as he has a list of topics we will discuss today.
Thanks, Mike. Great, Dan, we're excited to have you. We're looking forward to your insight, and certainly amidst a fair amount of market volatility that is impacting not just the overall market, but especially the growth sector and some changes. Maybe it would be a great place to start if you would just give us an insight for a simple investment process that you deploy at your Jennison Growth Fund in order to find good selections and deploy capital.
Great, and thank you, Mike and Adrian, for your time, and everybody here for using our large cap growth strategy. We really appreciate that. I'll be real quick because I think we got a lot of other stuff in terms of what's going on today. We're fundamental bottom up, and so essentially we have a large team of analysts who are sector and industry specific. So they're deep and narrow in terms of their research universe. And what we're all about is understanding business models and companies and how they evolve over the next 3 to 5 years. As growth investors, it's all about the duration and magnitude of faster growth and faster cash flow generation. But the reality of it is it's the durability of that is very, very critical. And as you can imagine, we're in the midst of the digital economy. And so what we're finding, as we all know now, is these leaders and these big, massive total addressable markets in the digital economy, whether that's social or e-commerce, and when we can down a list, as these companies have scaled up, they become more and more difficult to compete with. In other words, a little bit of a winner take all or a one or two winners take all. And so I always use the analogy, we love big markets and big opportunity sets, but we also have to have companies that make big money as they grow in to those opportunity sets. So it's our focus on the next 3 to 5 years that drive all our decision making, the metrics. Yeah, we'll mess around with the weights that respond to short-term phenomena, but not that whole lot. And I don't know if it really makes a difference, but it's getting that 3 to 5 year right. It's so important. Another way to put it, the marijuana business is huge, and it's going to be even bigger. It's like trucking, but there are no big winners who make big money. See, we're not interested in that. What we want is something like what we get with e-commerce or digital payments or GLPs or robotic surgeries. Notice I'm not even mentioning AI, which is the biggest of all. So that's sort of what we're focused on as investors. The ride will always be wild, but the point to point and the wealth creation, these business model is much more smoother than you think if we get these stocks right.
Okay, great answer. I guess I'll start out as well, just based on the back of that. The Magnificent Seven that are those super large cap stocks, kind of the big winners, as you might talk about, have had an extraordinary 2023 and 24. So the drivers of this extraordinary market that we've seen with the S&P up 25+% are largely uber large cap, mega large cap stocks. And does that mean that that's a large portion of your investment? At what point will we see the cash flow creation happen in the non-Magnificent Seven? This year we've seen them sell off a little bit, or I should say underperform a little bit. Is that indicative of a transfer of the initial super large caps that are cash creating at the front end to the broadening of the economy?
Yeah, it's the $1 million question, Adrian. We don't know yet, right? I think the reality of it is the Mag 7 did so well because they should have. We all know that. I mean, their fundamentals have been spectacular. But the real thing that we're focusing on, and I think this is most important to your question, is now they've gotten so big. It's like now, even as they execute flawlessly, they have this lull of large numbers that they now need to deal with. And so the rate of change has just slowed because of their success. we have $3 trillion companies. NVIDIA was a home run as it went from a $1 to a $3 trillion company, a three-backer, right? That means it now needs to go to a $9 trillion company. You see how it's really now have an impact. So the rate of growth of these stocks have slowed. Still excellent and still highest of quality business models. Nothing, we own them all. We don't own them like the index does. But now that has allowed these other faster growers in my world to have a delta. In other words, they can execute the Vertexes of the world, the Intuitive Surgicals of the world, the Snowflakes of the world, the Spotifys of the world. They now can have a delta where their earnings continue to chug along at extremely high levels, but now their edge, their difference of growth rates has now been noticeable. In other words, that's what we're starting to see with the market. The other thing that I remind people, and I just talked to a committee today, and that is, first of all, the Mag 7 is dominated by AI. Not all of it, but dominated, let's say. And we've just had 2 years plus years since ChatGPT hit the world. That's when the investor world learned about this AI thing. Now, one thing that I remind people is the AI winners, the NVIDIAs, the Metas, the Amazons, the Microsoft, blah, 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 they've been working on it for 10 years, right? So this is just nothing but the fruits of great management teams and leaderships and always looking forward. I've been in many a meeting with Satya Nadella. He doesn't think of tomorrow. He's not sitting there wondering what the Fed's going to do, or he's out there looking 3 to 5 years. And so AI's had this nothing but good news for 2 years. Well, now expectations have been elevated, so we're going to get more of a soft tooth pattern. That's what you're seeing today, is now the more natural progression of these stocks after the first big, holy cow, this is new, wonderful news, moves it higher. And we're now in a period where everyone's trying to pick at it, right? Deep Seek, too much money spent on the hyperscalers. Where's all this $350 billion of chips going to go? Blah, blah, blah. We don't know. That doesn't mean there's not a bad place to invest. We just know that it's going to be more volatile because people are going to pick away at it. And the other thing that's interesting is we've gone through this period where there's nothing but discovery, innovation, like, wow, I didn't know they could do this. But we're going to have some of that coming in the future that's bullish, right? Like we're going to have the first AI agent, like that robot that does the switchboards on the Jetson. But they're going to be able to help you through 7 or different tasks. No longer 1 for English, 2 for Spanish. Now you go to the next menu. 1 for banking, 2 for credit cards, 3 for mortgages, 4 for investments, 5 for retirement. Like we're not having any of that. We're going to have this robot talk to you, and it's going to be incredible, and they're going to keep getting better. And this is going to apply across the board. So there are stuff out there that's going to be good news that will offset some of this negative. That's the volatility. And then one last point, Adrian, I think this is the other misnomer. Remember, NVIDIA was down 50% in 2022. It did not invent the GPU in January 23 when that stock started working, right? The GPU goes back over 20 years. Meta was down over 60%. Amazon, this is interesting, Amazon in the midst of 22 had eliminated its biggest competition, Shopify, in e-commerce. You would think that stock would be further solidified as the number 1 player and the ultimate winner in e-commerce, and the stock still went down 50%. So the overshoot is quite significant. So this rally a lot of it was recovery from the overshoot, and then it was the fundamentals delivering up underneath of it. Today, uncertainty around what's happening in the administration and the yo-yo effect, the discounting mechanism is rates plus risk. Risk is uncertainty. So when uncertainty is hitting the market, expect our portfolio, like any other higher PE, longer duration, out 3 to 5 years where you make all your money type of portfolio, is going to get bounced around a lot more than the Coca-Colas of the world, the Procter and Gambles of the world, the Southern companies of the world. So that's important to understand. The other one is there's this unbelievably massively big algorithm out there with these traders that as soon as we hit volatility, as soon as we get whipsawed on tariffs, they sell high PE and they buy low PE. There's nothing you can do about it. it is the nature of the beast in terms of the short-term volatility. They have all these weapons of mass destruction. They can use that with, leverage played into it. And so that's going to bounce things around because they're playing with that discounting mechanism. That all works itself out over time, as we all know. But in the meantime, it's going to be like we are today. We'll probably be down 7% year to date at what point the Russell growth. And at one point we were up 7. So there's a 15 percentage point swing in a matter of 30 some days.
Awesome. Just reminds me that on your bots that will get out and answer the phones as opposed to you pushing the buttons. I recently booked a restaurant booking on Google, where Google picked up the phone and called the restaurant, made my booking for me, and then sent me a text saying I've spoken to them and it's booked, which is pretty amazing. Certainly believe in that. And you talk a lot about interest rates. Does that change the way you invest at all? We went through 2022 where we saw an interest rate hiking cycle. Tech and growth got hit pretty hard, but then we had elevated interest rates in 23, 24, and maybe because of the lack of movement of interest rates, we saw growth outperform. Does it change the way you think about investments? What might happen with interest rates or interest rate volatility?
Typically, no, because we're no good at predicting interest rates anyway, right? So, we have to have some kind of belief that it's going to be X in the future relative to consensus thinking. Now, we're all over interest rates, but we don't allow that to drive our decision making, only to the extent, and this is probably one of the biggest lessons we learned from 2022. It is the movement of interest rates higher because of some issue with the structure of the economy, inflation, right? That was unexpected. In other words, we all go back. We didn't think we all felt interest rates were going to move higher, but every month it was, they need to move higher than we thought the higher, right? It was this on top of keep moving higher beyond expectations. It wasn't until the middle of the summer that the word transitory had left the equation. And listen, we put $8 trillion into the system for COVID, right? 8 trillion. So don't be surprised that it takes a while for that to work through the system. So rates are important to us only to the extent that it's putting stress on the system beyond what expectations were built into the system. And so I'll use one caveat. Earnings are going to drive stock returns, not interest rates. And what would you rather own? A long duration asset like growth when rates are high, where there's a probability of them going lower versus higher in the future, or where they're low and going high, right? So the whole dynamic around interest rates, that narrative needs to change. Because remember, I got out of the Navy in the 90s. When interest rates were low is also when the economy was in the dumps, right? And so cyclical economic dependent companies, not growth, were really hurting on revenue and cash flow and margins, where growth stocks were able to maintain, not perfectly, but better than the cyclical stuff. And that's why growth did better when rates were low. It's more of, we didn't see the headwind like everybody else, like Coca-Cola or Kraft, right? But that's a dynamic that I think will need further analysis, because I will caution, the old rules have changed because we have to understand the environment that was occurring versus growth versus the other market, right?
Yeah.
Amazon grew sales. They grew sales, right? Well, everyone else was dying for sales. So there's a way to think about it.
Great. Well, first and foremost, thank you for your service in the Navy. I'll have to ask you later where at, because I got out of the Navy in the 90s as well. The old rules have changed kind of brings to mind as well that one of the things that to me has changed is that no longer are we purely just looking at sector and sector investment. We're looking at themes and thematic investment. And how do you, well, I guess, just getting away from AI and machine learning for a second, what are some of the other thematics that you're invested in, and how do you think about that? Because it seems no longer just IT; they're affecting Lowe's and Walmart and other areas.
Right, and that's a great question, because a comm services company like Netflix sells the same thing in Kuala Lumpur that it does in London as it does in New York City, right? So there's also this global ubiquitous nature of different players within what I would call these themes. And we're not thematic, so we don't get ourselves up and then look for opportunity. Sometimes people would think growth manager needs to do that. We're all about the underneath side. In other words, NVIDIA was a gaming company. Remember, it was Call of Duty that they were using the chips, but it also had the Bitcoin penalty. Remember, because the miners were ripping open the game boards and using the NVIDIA chips to do the mining. But our research really started on the drug side, on our healthcare side, because we started to hear that these labs were using the NVIDIA chips to collaborate on these massive databases of research on experimental drug theory, right? And so, whether it was a protein or an mRNA theory or a ligand or whatever they're studying, this is a huge data problem. They were using NVIDIA chips to work that problem out. So that's the bottom up getting us real excited about this silicon world and all the implications around this AI. So when you think about it, our themes are really aligned to companies that have these long runways of competitive advantage. The GLP-1s, right? Medical technology, like a Dexcom, but even more sexier would be an Intuitive Surgical, the robots, right? We like things like players in the e-commerce sectors or retailers who execute well both digitally and in the storefront. How about this crazy company like Costco that's been investing years like that, or even this crazier company like Walmart that has backed up the truck over the last 10 years in technology. So a lot of the themes we play are go through the sectors, but it really is all about innovation, investment in innovation, and the disruption or the competitive advantage that comes from it. Remember, we don't think Walmart will ever be a super fast growers like it was in the 70s. By the way, it was our number one contributor performance in the 70s. We owned it big time, and it was in the hinterland and value land. But we think that the competitive advantage, the duration of that for Walmart has been extended because 10 years ago they bought Jet, that e-commerce company, and then they plowed tons of money in technology and systems so that they become more efficient and more productive and really extract greater margin than any other competitor in their space because they've been so far ahead of the game doing that. So those are kind of the ways that we think of that from a bottom-up perspective. One last point, I know I'm going on a little bit here. We also like the idea, and Adrian, you know this so well, of these platform companies that have allowed themselves to use their platform to drive and start new businesses that continue the run of their scale. Think of AWS for Amazon, right? Think of all the different avenues that Meta now is driving its digital advertising model into, right? So we think of what Apple and their 2.3 billion Apple users out there in the world and how they're driving more business through the platform, because essentially you can't recreate these. And so they're using them to extract higher and higher levels of profitability of other products. Remember, the App Store is way, way more profitable than selling iPhones and iPads and all that other stuff. And so how Apple has changed its business model by using the platform.
Great answer. I should be taking notes on this one. I'm just very cognizant. I know we promised around 20 minutes for our investors for a quick snippet. Maybe just finish with DeepSeek, and I could almost just drop the microphone right there because to me it's been such a landmark change. It's been a change in the conversation around AI of, before can it pass the bar exam, and now it's just how efficiently can it pass the bar exam, which has all kinds of implications, kind of like you're talking about on themes of crossing sectors and the impacts. How have you guys thought about the introduction of that kind of technology, and has it changed anything that you've been thinking about on the fund?
But we like everybody else was surprised, and I think we now know the market way overreacted. It sort of did a round trip on DeepSeek. And the work that we have done, and there's still lots of unknowns on DeepSeek, really, to what extent did they use more NVIDIA GPUs than everybody thought. But I think there's enough known about the algorithm that it is more efficient, productive. So there's two things that I think people need to understand, and that is, all it looks like is any big disruptive trend, for it to be really, really big, it needs mass adoption. And when mass adoption occurs, then the cost of participating goes down dramatically as it accelerates. It's not a linear, it goes logarithmic. And we saw that with iPhones, right? We saw that with the PC. You can go on and on about the critical component of mass cloud usage if you were running a business and getting on a cloud provider. So the mass adoption, we still think DeepSeek falls into that camp. In other words, we think it's grown the ecosystem. In our world, then the winners are going to win bigger because the ecosystem has gotten bigger faster. And then my second point is, remember, DeepSeek is still on that learning side, right? The taking a bunch of data and figuring out how to answer something from the data. Like, show me the 75 places that the word abracadabra is in the books of the Library of Congress, whatever it may be, right? It takes all this information and condenses it like nobody's ever seen before. But we still need inferencing. We still need reasoning. We still need sort of the human brain element of not just data, but then interpreting the data to make decisions in this gray space that that exist out there. That's where AI is going. It's going to like anticipating and solving problems, not just giving you an answer from the data. And I think Jensen Huang, the CEO of NVIDIA, has indicated that reasoning piece is going to need more computing power than anything that we've seen before. His point is it's even more difficult. And so DeepSeek, the quicker we get more into the reasoning world, then I think the ecosystem gets bigger and our companies make big money off of it.
Great. I think we have a lot to learn on that one for sure.
Yeah, and we will, and it's going to be different a year. We have this meeting in a year from now. I'll be telling you another story, right? Because it is, but our point is, there's money to be made because the winners look like they're in position to win big. And that's the critical component. Remember, NVIDIA had Hopper and then announced Blackwell and sold them out for 2 years. And then when it really, after it announced Blackwell and all the things that chip can do, right behind it, they did Rubin, right? So they're they're moving the bar every time anybody thinks that someone else is going to come up with a GPU that competes with NVIDIA, because they're using their scale to change the betting game that goes on with the silicon side, so that they can continually extend their lead. And remember, NVIDIA is not a chip; it's also an application layer that all the programmers use with their chip. So there's this ecosystem stickiness effect, like Apple has, that goes on with those chips.
Great. I'll close it up for our investors' sake. I really appreciate it. If I could call out one thing, it is I'm just amazed that March of 2023 is when NVIDIA announced those earnings that kind of blew the world away, and that's the investors' introduction into artificial intelligence. And now it's the topic at dinner parties, it's the topic at home, it's the topic on investor calls, and it's truly changed the investment landscape. So we're very happy to have you as a manager, and one with great insights. And we'll certainly, and it looks like you got one more point. Go ahead.
One thing, and I would encourage all the advisors, everybody there, is to just Google and do some research and read about it. It's easy. A couple great articles of Google's DeepMind AlphaFold. Just do that. And this will stun you with how all this was working for years that nobody knew about. And what is the potential behind just the basic parts or the starting phase of AI. So again, it's Google. So just final one hint. 2 of the 3 Nobel Prize winners in chemistry work for Alphabet. Amazing story. So just, I'm giving you a hint. So it's DeepMind AlphaFold. And it's an incredible story. And it happened all right, in front of our very eyes, and we knew nothing about it.
That's pretty amazing. Well, really appreciate your time today. As I said, we're honored to have your insights and honored to have you on our platform as a manager. We look forward to future success with you.
Great. Thank you for your time. I really appreciate it. Great stuff. All right.
Thank you, Dan.
Take care.
Thanks, Dan.
Bye.